You don't need a lot of money to start investing. Even small amounts can grow into wealth over time, thanks to the power of compound interest. How to begin? ETFs and index funds, low-cost, diversified investing. Fractional shares, own a piece of big companies. Robo-advisors, automated investing made easy. Retirement accounts, tax-advantaged growth. It's not about how much you invest, but how early you start. Stay consistent, be patient, and take control of your financial future. Start investing today. Welcome to Finance School. Today's topic, how to start investing with little money. Let's go to our video. Many people believe that investing is only for the wealthy. The idea of growing wealth often seems reserved for those with large sums of money. But the truth is, anyone can start investing, regardless of how much money they have. Even if you're working with a limited budget, the right strategies and mindset can help you begin your investment journey and build long-term financial security. One of the most common misconceptions about investing is that it requires thousands or even millions of dollars. This belief stops many people from even trying. However, history shows us that some of the most successful investors started with very little. The key is not how much money you start with, but how you invest and grow it over time. Even small investments, if done consistently, can compound over the years and turn into significant wealth. Thanks to modern financial tools, investing is more accessible than ever before. Today, you can start with as little as $10 or $50 and still make meaningful progress toward financial independence. One of the most powerful concepts in investing is compound interest. This is the process by which your money earns returns, and then those returns generate additional returns over time. Think of it like a snowball rolling down a hill. It starts small, but as it gathers more snow, it grows larger and larger. For example, if you invest just $50 per month in an account that earns an average annual return of 7%, after 20 years, your initial $12,000 investment, 50x 12x 20, would grow to nearly $26,000 due to compound interest. Imagine what happens if you continue investing for 30 or 40 years. Starting with little money means you need to choose investments that don't require large capital. Here are some of the best options. 1. Index funds and ETFs. Index funds and exchange-traded funds, ETFs, are excellent choices for beginner investors with limited funds. They allow you to invest in a broad market with low fees. Instead of trying to pick individual stocks, index funds track the overall market, reducing risk and providing steady returns over time. Some brokerage firms allow you to start investing in ETFs with as little as $1. 2. Fractional shares. A great way to invest in major companies without needing thousands of dollars. Fractional shares allow you to buy a portion of a stock rather than a whole share. If a single share of Amazon costs $3,000, you can buy just $50 worth of it. Many platforms now offer fractional shares, making it easier to invest in big companies on a small budget. 3. Robo-advisors. These automated investment platforms manage your money for you based on your risk tolerance and goals. You don't need deep financial knowledge. Just deposit money, and the robo-advisor allocates your funds. Many robo-advisors allow you to start with as little as $5 or $10. 4. Retirement accounts, 401k, and IRAs. If your employer offers a 401k plan with matching contributions, invest as much as you can. It's free money. If a 401k isn't available, consider an IRA, individual retirement account, which allows tax-advantaged investing. Even small contributions to retirement accounts can grow into large sums over time thanks to compound interest. 5. Real estate crowdfunding. Traditional real estate requires large capital, but real estate crowdfunding platforms let you invest with as little as $10 or $100. This allows you to own a piece of real estate without buying an entire property. Now that you know where to invest, let's talk about how to do it successfully with a small budget. 1. Start small, but stay consistent. The most important factor in investing is consistency. Even if you only invest $25 per month, doing so regularly will help build wealth over time. Treat investing like a habit. Just like saving money, it requires discipline. 2. Take advantage of automatic investments. Many brokerage firms allow you to set up automatic contributions to your investment account. This set it and forget it method ensures you stay on track with your financial goals. 3. Reinvest your earnings. If your investments generate dividends or interest, reinvest them instead of withdrawing the money. Reinvesting ensures that your money continues to grow at a faster rate. 4. Diversify your investments. Never put all your money into one stock or asset. Spread your investments across different sectors, stocks, bonds, real estate, etc., to reduce risk. Index funds and ETFs naturally provide diversification. 5. Avoid high fees. High investment fees can eat into your returns, especially when investing with small amounts. Choose low-cost index funds and ETFs with expense ratios below 0.5%. Investing isn't just about numbers, it's about psychology and patience. Many new investors panic when the market drops and sell their investments at a loss. However, the most successful investors stay patient and think long-term. Trying to time the market. No one can predict when stock prices will go up or down. It's better to invest consistently over time. Investing based on emotions, fear, and greed can lead to bad decisions. Stick to your long-term plan. Ignoring fees and taxes. Hidden costs can significantly impact your profits, so always check the fine print. Many of today's successful investors began with very little money. Take Warren Buffett, one of the richest investors in history. He bought his first stock at age 11 with savings from delivering newspapers. Or consider people who invested just $100 per month in index funds for decades, only to retire with over $1 million. Their success wasn't because they had a lot of money up front, but because they stayed consistent over time. You don't need to be rich to start investing, you just need the right mindset and tools. Whether you begin with $10 or $100, the key is to start today. The sooner you start, the more time your money has to grow. Remember, small, consistent investments over time lead to financial freedom. Don't let the myth of needing large capital hold you back. With discipline, patience, and the right strategies, you can build wealth even with a small budget. So, what are you waiting for? Start your investment journey today and take the first step toward financial independence. If you liked the video, don't forget to like and subscribe to our channel. See you in the next video. Goodbye.